What is happening, everyone, and welcome back to Bitcoin Bulletin. The news cycle is absolutely exploding, and we've got some major updates that you absolutely cannot afford to miss. Get ready to strap in because the pace of change is relentless, and if you're not plugged in, you're falling behind. We're diving deep into developments that are reshaping the landscape, from high-profile figures making significant moves to critical analyses of the market's very foundation. What's the latest on global ventures and strategic financial plays? We've got the inside scoop. We're breaking it down. How is the market's core value being debated in the face of unprecedented hype? We're breaking it down. Are we witnessing a fundamental shift in how long-term investors view assets, or is it a temporary blip? We're exploring the data. And what does the future hold for digital assets when compared to traditional stores of value? We've got the expert takes. You don't want to miss a single second of this. Make sure you're subscribed and the notification bell is on so you never miss an update. Let's get into it. High-profile figure attends key global meeting. This development signals a significant intersection of traditional business influence and the rapidly evolving digital asset space. Eric Trump, son of former U.S. President Donald Trump, is slated to attend a crucial shareholder meeting for Metaplanet, a Japanese firm that has adopted a bold Bitcoin hoarding strategy. This event, taking place in Tokyo, underscores the growing international engagement of the Trump family with the cryptocurrency sector. Eric Trump's involvement with Metaplanet, where he serves as an advisor since March, follows his recent appearance at the Bitcoin Asia Conference in Hong Kong. Furthermore, his family's venture, American Bitcoin, a cryptocurrency mining company co-founded with his brother Donald Trump Jr., is reportedly planning a Nasdaq listing this month. Asher Genut, CEO of the company that holds a majority stake in American Bitcoin, confirmed Eric Trump's participation in the Metaplanet meeting, a detail initially reported by Bloomberg. The meeting's agenda includes a critical vote on a proposal to issue up to 550 million new shares internationally, aiming to raise approximately 130.3 billion yen, or about $884.41 million, primarily to fund further Bitcoin acquisitions. Metaplanet, which transitioned from being a hotel operator, has experienced an extraordinary surge in its share value, climbing nearly 760% over the past year on the Tokyo Stock Exchange. Formerly known as Red Planet Japan, the company's aggressive Bitcoin accumulation strategy mirrors that of Michael Saylor's Strategy Inc. In June 2024, Metaplanet announced its intention to acquire over $6 million worth of Bitcoin from a bond sale, a move that was part of a larger plan to expand its cryptocurrency holdings. By October of the same year, the company had increased its Bitcoin reserves by an additional 107.91 BTC, valued at nearly $7 million, demonstrating a strong conviction in Bitcoin as a strategic asset. Metaplanet's strategic advisor appointment of Eric Trump in March coincided with a remarkable 2,152% surge in the company's stock over the preceding year, reflecting the market's reaction to its Bitcoin-centric approach. By April 2025, Metaplanet had established itself as one of the top 10 corporate holders of Bitcoin, with its holdings valued at $388 million. The company's ascent has been notable, with Eric Trump himself celebrating its rapid growth in the crypto domain. As of the latest data, Metaplanet holds approximately 18,991 BTC, valued at $2.05 billion. This places it just behind Trump Media and Technology Group Corp., which holds 18,430 BTC, valued at $1.99 billion, highlighting a significant corporate shift towards digital asset reserves among prominent entities. This news has sparked considerable discussion about the increasing involvement of influential figures in the digital asset space and the strategic adoption of Bitcoin by publicly traded companies. But what does this mean for the broader market narrative? Stick around, because next we're diving into the fundamental dynamics of Bitcoin's supply and its impact on long-term investment strategies. Bitcoin's long-term value proposition examined. This analysis delves into the enduring nature of Bitcoin's supply against short-term market fluctuations, offering a new perspective for patient investors. Bitcoin's unique supply mechanism, characterized by its scarcity and predictable issuance schedule, is increasingly being viewed as a foundational element for long-horizon investors, creating a new paradigm that contrasts with traditional short-term market volatility. Unlike fiat currencies, which can be devalued through inflation, Bitcoin's fixed supply cap of 21 million coins ensures a deflationary or disinflationary nature over time. This inherent scarcity is often compared to precious metals like gold, leading to its popular moniker, digital gold. However, the digital asset's price history has been marked by significant volatility, with sharp rallies followed by substantial corrections. This volatility, while concerning for short-term traders, is seen by proponents of the long-term view as a temporary phenomenon that does not negate Bitcoin's fundamental value proposition. The argument is that, as Bitcoin matures and its adoption grows, its scarcity will become an even more dominant factor in its valuation, smoothing out the price swings. This perspective suggests that investors with a long-term horizon should focus less on the day-to-day price movements and more on the underlying technological innovation, network security, and the increasing institutional adoption that signals growing legitimacy. The limited supply means that as demand increases, whether from individuals, institutions, or even sovereign nations, the price is fundamentally pressured upwards. This contrasts sharply with traditional assets whose supply can be expanded, potentially diluting their value. For investors looking for a store of value that is resistant to inflation and central bank policies, Bitcoin's fixed supply offers a compelling alternative. The current market environment, with its mix of institutional inflows, regulatory developments, and macroeconomic uncertainty, presents a complex backdrop. Yet, for those focusing on the long haul, the predictable reduction in new Bitcoin supply through halving events, which occur approximately every 4 years, further reinforces its scarcity narrative. These events effectively decrease the rate at which new Bitcoins are created, thereby tightening the supply even further. This predictable scarcity, coupled with growing adoption and its role as a potential hedge against inflation, positions Bitcoin as a unique asset class for investors willing to weather short-term volatility for potential long-term gains. The narrative is shifting from Bitcoin as a speculative trading instrument to a fundamental digital asset with a robust, scarcity-driven value proposition for patient capital. The discussion around Bitcoin's supply dynamics is crucial for understanding its potential as a long-term asset class, challenging traditional investment horizons. While the long-term outlook is being debated, a prominent critic is questioning Bitcoin's current performance relative to its lofty claims. We'll break down those arguments next. Michael Saylor's Bitcoin strategy, emulated by Japanese firm. This Japanese company's aggressive Bitcoin acquisition mirrors a well-known corporate treasury strategy, signaling a growing trend in digital asset adoption. Metaplanet, a Japanese company previously focused on the hotel industry, is making significant waves in the financial world by adopting a corporate treasury strategy centered on Bitcoin acquisition, closely emulating the approach pioneered by Michael Saylor's Strategy Inc. This strategic pivot has seen the company's shares skyrocket, reflecting investor enthusiasm for its bold Bitcoin hoarding plan. Metaplanet, listed on the Tokyo Stock Exchange, has been actively increasing its Bitcoin holdings, most notably announcing in June 2024 plans to purchase over $6 million worth of Bitcoin using funds secured from a bond sale. This move was not an isolated event. By October 2024, the company had further bolstered its reserves by acquiring an additional 107.91 BTC, valued at nearly $7 million at the time. This consistent accumulation underscores Metaplanet's deep conviction in Bitcoin's potential as a significant store of value and a strategic asset for its corporate treasury. The company's transformation is further highlighted by its stock performance, which has surged by nearly 760% over the past year. The appointment of Eric Trump as a strategic advisor in March 2025 appears to have amplified this growth trajectory, with the company's stock experiencing an impressive 2,152% increase in the year leading up to his advisory role. This strategic alignment with a prominent figure like Eric Trump, who is also involved in other crypto ventures, signals a broader push towards mainstream acceptance and integration of digital assets within traditional corporate structures. Metaplanet's aggressive accumulation has positioned it among the top corporate holders of Bitcoin. As of April 2025, its Bitcoin holdings were valued at $388 million, making it one of the top 10 corporate entities holding the cryptocurrency. Currently, CoinGecko data indicates Metaplanet holds approximately 18,991 BTC, a substantial stash worth $2.05 billion. This places it in close proximity to Trump Media and Technology Group Corp., which holds 18,430 BTC valued at $1.99 billion, illustrating the significant capital allocation towards Bitcoin by these entities. The company's shareholder meeting in Tokyo, where a proposal to sell new shares for further Bitcoin acquisition is on the agenda, marks a critical juncture in its strategy. The success of this plan could further cement Metaplanet's position as a major corporate Bitcoin holder and a bellwether for similar corporate treasury strategies globally, drawing comparisons to the pioneering efforts of Strategy Inc. Under Michael Saylor's leadership. The market is closely watching Metaplanet's strategy and its implications for other corporations considering similar Bitcoin treasury allocations. With corporate strategies shifting, we're now turning to a critical voice questioning Bitcoin's current market position. Stay tuned as we dissect the digital gold debate. Prominent critic questions Bitcoin's valuation amidst hype. This commentary challenges the digital gold narrative by contrasting Bitcoin's price action with that of traditional gold, amid significant market attention and support. Peter Schiff, a vocal critic of Bitcoin and a staunch advocate for gold, has recently raised questions about the cryptocurrency's current market valuation, particularly in comparison to gold's record-breaking performance. Schiff pointed out that despite considerable hype, significant corporate investment, and even perceived support from the Trump administration, Bitcoin remains substantially below its all-time high reached in November 2021. Specifically, he noted that Bitcoin is trading over 13% below its previous peak, while gold prices have been soaring to new historical records. Schiff articulated these concerns on the social media platform X, where he frequently engages in discussions about economic policy and financial markets. His observations highlight a perceived disconnect between the bullish sentiment surrounding Bitcoin and its actual price performance when measured against traditional safe haven assets like gold. Schiff has consistently expressed skepticism regarding Bitcoin's long-term viability as a store of value, often referring to it as a speculative bubble. He has previously predicted potential price drops for Bitcoin, advising investors to sell and re-enter the market at lower price points. His critique extends to the broader economic landscape, where he often links the U.S. fiscal situation and national debt to historical monetary decisions, such as the exit from the gold standard in 1971. According to Bitcoin Bulletin Pro data, as of the time of writing, spot gold was trading slightly lower at $3,439.32, but had seen significant gains over the past month and year-to-date, rising 4.56% and 31.1% respectively. In contrast, Bitcoin had fallen 0.9% in the preceding 24 hours, showing a 4.9% decline over 30 days, though it had still gained 15.9% year-to-date. Schiff's reference to Bitcoin's all-time high of $124,457.12 on August 14, 2025, and its subsequent 13% drop, serves as the basis for his critique. This comparison is central to his argument that Bitcoin is failing to live up to its digital gold potential, especially when gold itself is performing exceptionally well. His commentary adds a critical perspective to the ongoing debate about Bitcoin's role in investment portfolios and its efficacy as a hedge against inflation or economic uncertainty, particularly when juxtaposed with the consistent performance of gold. Schiff's remarks have ignited debate among investors about Bitcoin's true value proposition compared to traditional assets. We've covered major global plays, long-term value debates, and critical market analyses. That's a wrap on today's deep dives, but don't go anywhere. We've got a quick recap and your essential call to action coming right up. And that's a wrap on another packed Bitcoin bulletin. We saw Eric Trump heading to Tokyo for Metaplanet's Bitcoin-focused shareholder meeting, explored the long-term investor paradigm shift driven by Bitcoin's supply, witnessed a Japanese firm emulating Michael Saylor's Bitcoin strategy, and heard Peter Schiff question Bitcoin's performance against gold. Don't miss out on any of these critical updates. Hit that like button, subscribe to Bitcoin Bulletin for your daily dose of crypto intelligence, and ring that notification bell so you're always in the know. Make sure to follow us on all social platforms for even more insights. We'll see you next time.